Welcome back. We're getting ready to end the year. I hope you've all made it through the craziness, the fun, the love, and all the gifts that come with the holidays. Welcome back to Spicy Takes and Tax Breaks. I'm Aubree Denekamp, and today I'm going to say something that might ruffle a few feathers or hit a nerve for some of you. And trust me, I do get it. It's one of those that for myself personally, I didn't really understand until it was an impact I saw happening to my dad as I started being more educated himself as a solopreneur at the point, had been for a very long time and was successful, but wasn't being advised correctly. And then as I continued learning, thinking I knew what I was doing, learning how much I didn't even know for myself and what exactly at those growing stages for my situation could be and what I could be taking advantage of. So honestly, when it's hitting the people I see, even my clients or people I talk to year after year, being wrongfully advised or just not advised at all, thinking they are being advised, they have no idea how much it's costing them and how much of an impact it could make to their small businesses. It's something I am so passionate about, and I hope listening today you get a little bit excited about. The truth is not harsh. It is expensive, though, and we're here to make it not expensive. If you've been listening along, we're almost to the end of the year, so you've already wrapped up your books, hopefully, seen some financials. Know if you made some money in 2025, hopefully can compare that to how you did in 24 if you were an existing business. And if you're planning at all to make that same sort of money or that same profit in 25 or 26, that you made in 25, then we have a big problem here. Nothing about how you earn it, keep it, or use it is changing year after year. It's not stability. It's not even sustainable. It's stagnation, and it's going to eventually lead you into a place of panic, stress, or basically cutting yourself paycheck to paycheck. And even if it's not doing that, there's so much more growth and expansion you could be doing, but those aren't typically the people I'm talking about here. And, the part that people typically like to hear even less than that, and it's unfortunate, but before we get into it, is you're probably paying way too much taxes on the stagnation to begin with. Income is not even growing, but your tax bill is going to continue to grow. Your profits might not be making any expansion, but your tax bill still will. And when income exists, there's no strategy in place. The IRS is 100% of the time going to win. So today we're talking about how to make yourself in a winning position, how doing okay isn't actually going to position you the way you want it to financially long term, and why it's actually one of the most dangerous places to be long term or to get stuck in. And maybe a few little tips on how or where at least to start looking to change that if you want 2026 to feel differently, if you've been on that same roller coaster. We don't want it to be louder. We don't want it to be busier. We don't want it to be crazier. We just want it to be different. We want to add strategy into that. We want to add savings into that. And we want to actually build it out to where you're making more, working less. And even if you're doing none of the above, at least making the money that you could be paying or have been paying to the IRS start working for you. So every January is typically people set goals. The gym's the craziest. I avoid the gym like the plague in the January season, even up into February, depending on what gym I'm at the time. But in my business, I hear the same type of things. I want to save more. I don't want to work as much. I want to stress less. I want to be on time on my taxes. Maybe I don't want to file an extension this year. I'm going to be more on top of it. I'm going to get my pricing in line. I don't want to file anything late this year. I don't want to actually, not that I don't want to, I want to for the first time, maybe file quarterlies, any of that stuff. Just wanting to feel more in control, though, is basically whatever fashion it is, whether it's accounting, fitness, life, relationship goals, that people just want to feel more in control. And those are great goals. Everyone should have those goals. But the bigger is the execution, the plan that needs to be in place. Because typically January turns into March, March turns into summer, and suddenly it's December again. We're back into this exact same place 2-3 days left of the year. And the hard truth about it is that most people don't actually have a money problem going into the year. They have a design, a structurally incorrect placement of how it's coming in to begin with. They can have the same amount of income, the same amount of stress, the same confusion at tax time year after year, But what they can do is start looking at how do we change that? Is the systems that need to be in place for my business operationally? Am I doing what needs to be done? But bigger than that, am I structured correctly? Is the way I'm paying myself matching the income I'm making and the distributions or profits I have left every year? Are the habits I'm doing each quarter correct? Am I paying those quarterly taxes? Am I cutting myself a payroll? Am I meeting with an advisor? Those are all huge things that are going to make a difference. The same advisor that someone talks to year after year, and a lot of times it's a tax filer, but everything is already done by the time you get to that person, whether they're the greatest or they are just there to file your taxes. I get it. I am human too, like everyone else. And I do ride that same procrastination and avoidance canoe. The difference is I have learned how to steer the tax canoe and the bookkeeping canoe, the scared of finance canoe. So this is one I can sit in the seat of. But instead of letting that procrastination turn into this island that I got stuck on for specifically this and how I advise my clients, is that we get to steer, change, and decide who takes our money and how much of that money goes. And for me, that became fun. I'm not asking that to become fun or for you to research any of that, but you can work with someone or ask the right questions with who you're already working with to get yourself there. So if any of that resonates, hear me clearly when I say this. You cannot expect any sort of different outcome, financial or any other way, if you're doing the same thing or have the same setup. Money does not grow because you want it to. If someone out there has a way to do so, please, please, please drop something in the comments, because I will reach out to you and invest whatever I possibly can and raise whatever funds, because that's incredible. I would love that. But it's growing for most people because they're working their tails off. It can also grow because you are investing money you were already going to spend or saving money that is otherwise not going to be accessible to you into something that allows growth not only for yourself, but for protection even in your current life, but also for your children, for your grandchildren, your nieces, nephews, whatever charity you're involved in, whatever that looks like, the picture could be painted completely different. And one of the big things is like, you get to build what that is. No matter who you're working with, you get to build what that design looks like in your life and how that makes sense. So this is where it gets fun. The shift in the separation between yourself, your business, your income, and the IRS is exciting. People who are building wealth don't do more work. They don't get another job. They're structuring it differently. They're shifting their income. Give you an example. More income without structure is just more tax. Higher tax brackets, higher income levels, all of that. That's it. It's sweet. And it's a very small little reward for being so much more hardworking, I would assume, being able to grow into that new level. What you can do and how you are structured matters so much. How you are paying yourself matters so much. How the income is flowing into your personal return matters so much. This is why two same people in the same industry, same business, can make the exact same amount of money. They can have the same amount of expenses, the same amount of employees, anything like that. But they can live two different lives. Bigger than that, they can have a completely different tax return at the end of the year. One person could be owing at least, whether they owe it at the end of the year or have paid it throughout the year, their taxes within the year could be several $100,000, whereas the other one could be maybe 50 to 60,000. And that difference is huge, let alone you look at a smaller scale. Someone who is struggling to stay alive in the first few years of a solopreneur business could be having to scrape by to make $15,000, $20,000 tax bill at the end of the year. But could you imagine if instead you're not having that tax bill and able to spend that $15,000, $20,000 you've scrounged up to invest in your business or invest in a retirement account or your children, your family, or whatever venture is next? It can make all the difference in the world. One feels broke and stressed. The other feels calm, controlled, and can make a new plan to continue growing that. Not because one is working harder, not because one is smarter, but because one is building an architecture around their life and what is working for them. Also what skill set they have, and they're working with a team that helps them. So I'll give you a real life example here. Let's call it a small business owner, less than maybe 5 employees. They net around 100,000 a year. They can make gross revenue 10 million or 100, 500,000, let's call it, in a year. But at the end of the day, let's say netting, which means profit, is $100,000 a year. They're operating as currently a single member LLC. By default, there's no strategy behind it. They believe this LLC was a strategy, whether that was for liability purposes, they were told, or from a tax strategy purpose. We met with them last week. We filed a late S Corp election. That is completely legal. We still are not at the end of the year. We've done this kind of throughout the holidays, so we're at a weird time, but we still were able to get it done, get them set up for payroll. It is 100% legal, completely allowed, fine. Again, end of year, but based on the whole 2025 picture, they're now considered an S Corp. That one move alone, though, saved them over $16,000 in self-employment tax. This is before we started looking at any other reimbursement plans, accountable plans, Augusta rules, retirement plans, anything else that there was that we did for this client. That one move by doing the late S Corp election saved $16,000 plus. That's something that everyone should be looking at if you're making more than $40,000 a year. That's, again, before touching any of the other strategies. So it's nothing fancy. It's something that you can be doing in your own business. If you don't have a business, you're a high income W-2 earner. Well, let's look at that. You could start a business. You can start offsetting some of that. You can start doing different sort of plans to save or invest for either yourself or your children, if that's the picture for you. But one of the same things is same business, same income, different structure, and very, very different outcome in taxes. If you don't know why you're structured the way you are, this isn't your field, that's okay. If you don't know why you're an LLC versus a sole prop versus an S Corp versus a W-2 versus a 1099, that is your first red flag. That is something everyone should know. If you don't, that's okay. But ask someone. Structure should absolutely be intentional. It's not a defaulted thing. And the same goes for spending. It should be absolutely fun, should be enjoyable, should be used to fit your lifestyle, but it needs to be on purpose. And if you structure it that way, it can be incredible. So another one is like, what can I deduct versus what am I building? Those are two different questions I ask my clients, and we really dive deep in on because those are different things. It's huge. People get obsessed with write-offs. How much can I write off? How much can I deduct? But do you need to buy a house? Do you need to have any sort of capacity to get a loan? They're chasing deductions like a Pokemon Go game. Do you guys remember that? That was, probably 15 years ago, but adults were running through parks, up stairwells, sitting in cars on the side of the road, staring at their phones, trying to chase these little characters. And honestly, that's how people a lot of times in business treat deductions. Random deductions are amazing things you can funnel through businesses and work-life balance type of idea. But that's not how you're building wealth. It's reducing tax temporarily, but it's not actually building a strategy for how you stop paying a rent payment and get a mortgage or start owning another company that rents your business a monthly rent for the building that you own, whether that is yours alone or you have several different tenants in it. I mean, the strategies go on depending on what level you're at, but the better questions you should be asking yourself is, what kind of life am I living already? Where am I at? What is my business life already? What is my income already? What kind of fun do I like to have? What business is going to support that life? What income needs to support that life? And looking longer term, what future is that building for my retirement? What future is that putting into place for my kids? These are big questions that I think a lot of people don't ask until they're asked or have to sit down and look at it from a time restraint. They're big. They should be asked. Deductions absolutely should support your life. So as much as I'm saying we don't want to deduct our life, we absolutely do, but they're not supposed to distract you from a longer term goal, which I think for a lot of people, it does end up distracting them from. One of the big things here is I tell my clients all the time, if you can't get a hold of someone to ask, you don't want to, you just want to be impulsive, ask the question to yourself alone does the write-off align with what I'm going towards? For example, do I need to buy a new truck this year or next? Is that something that I would need to be buying? Or no, because I saw a TikTok reel and then got down a rabbit hole that if I did this, I would save millions of dollars. The question there is really more important. What do you need and where are you going? It's not just buy a truck because someone said it'll save you money. Before you're spending that money, I want you to say to yourself, does this support whatever that plan is? Does this make my year better? Does this make next year better? Does this make maybe this year better, but come 2 days, 3 days from now when we hit January 2026, does that make life so much harder when those payments come in? Do I need to hire someone? Do I hire someone because I need an expense? Those are huge, huge questions because there's very definitive right and wrong answers for most long-term plans here. So I strongly recommend finding someone, if you don't already work with someone, who has like some sort of fixed fee advisory model. And the reason for this is in the beginning, you might be a little bit more heavy-handed asking questions, but you're going to get answers that are going to support you through that whole year until you get an update about what's next on the law, or they meet with you at tax time or for those quarterly plannings. You'll be able to take that and make those decisions as you move forward. So one of the things that I hate to say, because at times I get why people are like this and it's not a fault thing. So most people don't know. If you have a CPA, and one of the biggest things that I run into is people say, I have the greatest CPA. I've never been audited. I work with H&R Block and they have the greatest audit protection. I've never gotten a notice from the IRS. And while those are really great things, I'm not taking that lightly, they are, it should be more than that. So if your accountant only talks with you in March to say, hey, are we doing an extension or do you have your paperwork for me? They're not helping you build a long-term plan or even a current plan that probably is suiting you best. They are not helping you build wealth or a retirement plan. They're doing exactly what you actually hired them to do. They're filing your taxes. They are taking what happened in the prior year and documenting that in a form. That doesn't make them bad. Them not getting you audited or penalized or filing late is incredible. That is really great. But it just means they're not doing strategy, which is probably not what you hired them for. And strategy is really happening before the money is ever recorded. Honestly, in a perfect world, it's before the money is even earned, before the money is spent, before the money is going out. Absolutely, though, before the new year is starting. And you need someone who's going to help you decide how to spend it, not just report it, or even if it's not deciding how to spend it, at least advising you what spending it in the way you're doing is going to impact you from a liability standpoint. If no one has walked you through the projections, options, what ifs before in your scenario, for 2026, you are already behind at this point. You're not unable to fix that. You're not able to get ahead again. So don't be worried, but you are already behind. You should already have a plan in place for what 2026 looks like. So let's paint a picture here. A strong year doesn't feel frantic. It doesn't feel like you're making decisions reactively or looking at your bank account to say, hey, can I afford this? Or should I be making this decision? Can I hire someone new? Is there enough money in here for me to get a boom truck for a electrical company that I'm working for because the contractor fell out? It doesn't feel any of that. It doesn't feel like you're constantly catching up or saying, I have no clue where I'm at. It's supposed to feel organized. It's supposed to feel intentional. It's supposed to feel like you have some control, even though ultimately I know we don't, but it's supposed to be calm and clear in some capacity. When you know your numbers, doesn't even have to be perfectly, honestly, but you feel confident in the things you do know. You now open up this area where you know your options. You know which levers you can pull, when you can pull them, and how hard. You know how aggressive you can be in certain things. And April, at that point, doesn't scare you. You're actually excited because you've already typically paid all the taxes you owe, but you're looking more forward to getting it closed out so you can continue in your future plan. December doesn't surprise you anymore. It's not lucky. It's not because you have teams and teams of people doing things behind it. It's not a privilege. It's not that you have unlimited wealth. It's part of doing the job of the strategy, outlaying the plan to begin with, having someone follow up with you, making sure the plan is being executed before end of year. Really, once it's built, it compounds over and over and over again. Like the stature changes, the laws continue to expand and grow. Some go backwards in a way we don't want. Some continue to grow bigger. There are different provisions that are put in place. And you can do two things. You can, one, obviously make it more the life you're living now, but you can also start to shape the life you want to live behind that. So one of the things that I want you guys to think about and how starting 2026 can impact you, and I don't want you to think you would need an overhaul of your entire life overnight, because goodness, I've done that countless times. For example, cleaning out an entire room, which turns into a storage closet and a kid's bedroom and X, Y, and Z. And then halfway through taking everything out, you're like, I'm done. It's exhausting and it's not sustainable. There are a few things that I do want you guys to kind of think about getting into this new year. And we'll keep it simple with three things. Get clear on what structure you want. And that is bigger than just even in the entity structure or the way you're being paid right now. More even your life. What is the structure, the cadence, the amount of time you want to work, the amount of years you want to work until retirement? What does that all look like? And if it is chosen casually, it needs to be reviewed consistently until it's a little bit more intentional, I would recommend. And I get that that's overwhelming and things change rapidly, but definitely put something in place and continue to review it if you don't have a plan in place right now. That's okay too. Number two would be know your numbers early. I recommend doing it monthly, but even if that just means semi-annually, do it. Guessing at costs way more money than having a cost up front for clarity. It just does. Every single time, I've never seen it work differently in the sense of a business or taxes or financials. And if you have a way, again, drop it in the comments because I'm thrilled by that. It might put me out of business, but I'm thrilled to see it. And number three would be decide before the year ends what that looks like for you. Planning absolutely will be reacting every time, but you can't really create a plan if you don't know what you want it to be. What the outcome is supposed to look like is what you need to be communicating. Does that mean, again, are we selling our business in the next few years? Are we needing to purchase a home and only have our business income with no other income to qualify for a mortgage loan? Do we need to fund a new business from the existing business profits? What does that look like in your life? Are you planning to have more kids? Should we start an HSA fund? Are you retroactively looking at rental properties you've had and said, hey, I didn't even understand what cost segregation is? Or should I get my realtor license to become an active participant in some of these things that we have going on? All of those are really big decisions that aren't going to take a lot of time to implement once they've been decided. And that's really a big thing that I want to reiterate again here is a lot of this is things you're already doing and could just have a little bit of compliance behind it and make all of the difference in the world financially. So that's it. Sounds simple. It is simple when you have someone on your team to help you, or at least you're doing the research or asking the questions. It's not necessarily easy, but it is simple once it's in place, or even if once you have a direction that you want to go with it, makes it great. Again, if you're done playing defense with your money, if you're tired of guessing, if you've been working so hard and feel like that needle is never moving forward and you still always feel behind, this is your sign. 2026 does not need more effort. It needs better decisions. It needs a little bit of thought behind it, a strategy. And if you want to help build those decisions, not just filling out what already happened when the next year comes and compliance-wise you have to file, then I've got you. Check out the show notes for ways to work together. I'll put a few different free downloads in there, or come hang out with me online where I write this stuff down in real time. Again, this stuff is something you should be implementing yourself. If you have questions, always reach out. We're a great resource for you. Or take these into even Google, ChatGPT, ask your current advisor the questions. That's what this is here for. Again, spicy ticks and tax breaks. I'm Aubree Denekamp, and in 2026, I know I'm doing it differently. We here are doing it differently. What about you? Hope you stick around.